want to open a small discussion with you guys before we get started in terms of what is your opinions on indicators? What is your opinion on indicators? Do you think indicators can be useful? Do you think indicators are made by the devil? Do you think indicators are a way that big boys use to control the world? You know, like there are conspiracy theories out there as well, right? Like, so what is it? What is it? And why are there so many of them? If indicators are good, there should be a handful of good ones, right? But why are there 1,000+ indicators? Because every single indicator has its own unique way of interpreting the market. Just like you, as an individual in the market, you have your own interpretation of the market, right? So if the market does this, let me ask all of you guys in here, what do you see? A downtrend. Can I ask you one question? What makes you see a downtrend? Okay, lower lows and lower highs, right? It's this concept. Indicators are built around similar ideas. Is they also technically look at the charts and they say, oh, based on what I see, it's this condition, whatever that condition is. Okay, whether it's a downtrend, uptrend, blah, 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 blah. Okay, but us as traders and indicators, there's actually no difference. There's actually no difference. Does that make sense? Are you guys with me? Is everything okay? You guys can see me drawing and everything? Yeah? Okay, perfect, perfect. Yeah, if anything happens that you can't hear me or anything like that, just let me know. Okay, so generally when this happens, indicators will point to this direction. But so will the human beings. There's nothing different. You know, all the human beings that are saying indicators are the devil. It's so bad. I can't believe we look at indicators. And so everyone's repeating what they hear on YouTube saying indicators are bad. But they don't realize they themselves are indicators regardless. Regardless. Have you guys ever thought about that? If you remove the indicator, well, okay, how are you going to interpret this direction better? It's the same thing. You will still see a downtrend, right? Okay, you'll still see a downtrend. So at the end of the day, it's, are you considering a buy when you see this down move? If yes, you are better than the indicator. But if you require this to happen and then you do the buy, then you are no different than the indicator. So far, so good? That makes sense, right? Right? If you're buying on the face of the down move, then you are better than the indicator because you are in a predictive state. Okay, you're in a predictive state. But if you require this to happen and then you buy, you are not in a predictive state. You're in a state of joining. Okay, or if you want to call it herd mentality. So I want to know by trading later with the idea of the trend is your friend and all of that stuff, why not have an indicator? What's wrong with that? Isn't that the same thing as what normal people are doing? Right? So the best thing to do is always, whenever you push something away or you accept something, take a moment and think about it. Don't just look at someone saying this is good or this is bad, and just because you respect them that you have to close your brain. Don't do that. You got to think for yourself and be like, why is this actually bad? Why is it actually good? Okay, not just from the eyes of profit and loss, but with the idea of, does this make sense? Because what is trading after all? It is the buying and selling of things, right? I buy things when I see they're on a discount. I don't buy things when I see prices for that item keeps going higher and higher. Simple concept. All of you guys do this in real life. All of you guys. Okay? If the Mastering Price Action course that we sell is $500, and then tomorrow I say, let's make it $700, and then I'm like, more people are buying it at $700. That's weird. Let me make it $70,000. Oh, and then more people will buy it. Isn't that sound illogical? Right? It doesn't make sense. It doesn't work like that. It's not the way trading is performed. But when it comes to visually with our eyeballs, when we look at a chart, we all have this feeling of, I want to know first the direction, and then I will enter. That is that requirement, and I need to know. I need to know first before joining the market. Okay, which means I want to buy, but not yet. I want to buy, not yet. I want to buy, not yet. I want to buy, not yet. I want to buy. Yes, I can see it's going up now. I want to buy. This requirement is what makes indicators keep coming into the market over and over and over again, because the indicator can do that for you and you don't need to do that. So far, so good? Does that make sense? Right? It's a simple concept, right? It's a very simple concept. It's like, you know what? I'm lazy to even see this uptrend. I'll let the indicator tell me, and then we'll see. Right? Okay, so now let's go into a little bit further and discuss one important piece of, are they any good? Okay, are they any good? Which ones? And how? And once we figure those out, we can figure out when do we use them. Okay, because this, if done right, can make your indicators work. But you have to answer these first. Okay, so far so good? Okay, we're going through the logical theory aspects first for you to understand all of these concepts first before you just jump in and saying, just show me the chart, just show me the chart. Tell me, where do I need to buy? When I hear stuff like that, I think, well, even if I give you the answer today, tomorrow you're going to make loss. Even if I give you the answer tomorrow, the day after tomorrow, you're going to lose it. So what's the point? What's the point? You got to get through this process. If not today, tomorrow, if not tomorrow, the day after tomorrow, you have to eventually solve this to become a trader going forward. How long are you going to rely on a signal service? How long are you going to rely on someone to tell you what to do? There has to be a point where you learn this eventually, don't you? Right? Don't you guys agree? There has to be a time that you have to figure it out once and for all, instead of just saying, someone just tell me what to do and I'll just copy it. You know, I'll just copy it. Okay. All right. So it's a very big thing. This laziness, it's a very, very big thing. And this is why scams are increasing like tenfold. You guys have started to notice a lot of scams around Forex now. Hey, I've met Mr. Charles or Mr. Jason, and if you want to learn how to make money, he turned my $500 into $40,000. Here is his WhatsApp telephone number. And all the people who don't want to study, who don't want to do any work, $500 into $20,000? Sign me up. Where do I send my money? I have $20,000, not 500. What can you do with that? Ay. Right? Unfortunately, people do fall victim to that, and it's crazy. It's nuts. It's nuts. So when it comes to trading or investing, do not give anybody your money. Anybody. Learn it yourself or lose it yourself. Do it yourself. Learn it. Learn it. Okay? Okay. All right. So let's take it slow. Let's take it slow. So let's start with what indicators? Okay, let's start with what indicators. Now, there are certain indicators as price action traders that we like to use. Now, one of them is ATR. Do you guys know what is ATR? Right? So it's called average true range. Okay, average true range. Okay, what an ATR is let's say the markets are moving, right? What the ATR does, your indicator ATR, you can set it for a period. Now a period basically means you select a number. That number is going to take that amount of candles. So the standard period is generally 14. That means in the last 14 candles, it tells you what is the average movement. And this will tell you the price. It'll tell you, okay, the average movement is 79 pips, for example, or the average movement is 20 pips. Now, can I ask you guys one thing? Why is that important? Why is that important? Okay. Some people are saying for stop losses. Good. Okay. That can be useful for that. To know our limits, momentum, target, volatility. Okay. So let me ask you guys this. I'm going to take it a step back. I'm going to tell you this. Let's say the ATR today at the period of 14, just simple. I'm on the 60-minute chart. The ATR for Euro USD today is 25 pips. Okay? And you're trading it. And you're like, I just entered a trade right now. I bought it. I bought it right now. My take profit is here. Now, how far is that take profit? 400 pips. So can I ask you one thing? Let's say that 400 pips that you have is a logical take profit, but will it happen in one candle? 2 candles? 3 candles? You can start to get an idea of how long it might take for that trade to work. Therefore, you can't panic in the next 10 minutes and saying it's not working. You cannot panic in the next 20 minutes and say it's not working. For that target to be achieved, you need more time because the market doesn't move beyond this. Now, let's say you understand that concept just at the surface of it. The surface of it is 25 pips. Therefore, I understand what it's going to do. So far, so good. You guys with me? Let me take you a step further. Okay, let me take you a step further. Tomorrow, you come in and you realize on the 60-minute chart, your ATR is 23 pips. Has anything changed for you? No, not really. It's just thereabouts, right? You go in the next day, your ATR is now 50 pips. Would you say the markets are busy today? Yeah, it's busy today. Now, why the hell does it need to be busy? It's Forex. Forex is 24 hours a day. Why does it need to be busy? It's 24. How many of you guys are in here have a notion of, I chose Forex because it's 24 hours a day. And I thought, maybe I just got home from work. It's 7 p.m. I'll trade for 10 minutes. I'll make like $5 million and then I'll stop because it's 24 hours a day. So that means, I'll just trade, right? Yeah, it's 24 hours a day, but that's not necessarily true. It's not busy for 24 hours a day. It's busy when people do business in the Forex market. When does that business happen? When the markets open around the world. It gets busy. For you to make money, okay, for you to make money, I'm going to start with some basic thing, some basic stuff, right? For you to make any money, okay, let's say this is you, okay? Let's say this is Sven. Okay, I'm going to take some more names. Nanang. Okay, this is Kwan and Malcolm. Okay, and Malcolm. Okay. All right, so this is you guys right here. And the markets are doing this. 20 pips up, 20 pips down. Can you make money? Maybe, right? Maybe. What if I said this range was 50 pips wide? Can you make money? Same range, same pattern. I'm going to change something. It's 15 pips wide. Can you make money? Why does that thought process change? The pattern is identical. It's exactly the same. You know what to do with that pattern. But by the time you grab it and you pay for your spread and everything, there's not enough movement to make money. Correct? There's not enough movement to make money. And you better be damn sure that you grab the price at the extremes and you cannot get a price in here. Otherwise, you're dead. There's no margin for error at all. Right? So Swen, Nanang, Kwan, and Malcolm, let's say you guys are investors. You guys are investors in Apple. Okay? You guys are investors in Apple. You buy Apple at the price of $100. Okay? Prices go up to $200. Okay? Prices hold a little bit around $200. Then they go up to $300. Now, can this price continue to go up to $3,000? Is that possible? Absolutely. It can. It can. See, the thing with stocks is it can pick a direction and just go that way. In stocks, that is very well possible. Is very well possible. But now, let's say some traders get involved. Okay? Now, Swen, Nanang, Kwan, and Malcolm, let's say the price is now dropped to 250. How do you guys like it? Are you guys affected? Do you guys like it or not like it? You hate it, right? Like, oh man, why does it come down? It shouldn't come down. Let's hope it goes back up, right? We're not happy about that price. Now, a trader, on the other hand, he does not care what price it is. He doesn't care. He's interested in, can I take it from 250 to 275? I'm done. I made my money. I'm out. Can I take it from 275 to 280? I made my money. I'm out. He doesn't care what the price is. But for investors, the price makes a difference because it tells them how much they can buy or how much they can sell, right? But for the trader, he's like, no problem. I just need to know it will move. I just need to know it will move. Make sense? Right? So far, so good? So you're a Forex trader. You have to understand that now. You're not a stock trader. You're a Forex trader. I want you to tell me one thing right now. Euro USD, for example, is that one company? If I was to say, let's assume Forex is companies, is that one company or two? It's two companies. So if the price goes up, that's good for euro, but it's bad for dollar. Now, can the price keep going up? If they do nothing, yeah, it can keep going up. But what are the chances that they just sit around and be like, you know what? Let's ruin the economy. Only when it goes up to a certain indicator or a Fibonacci level, only then we will fix the economy. Until then, let's wait till Bob, Lisa, and Martin, let them hit their take profit first, and then we'll do something. We'll fix the economy later. But let's let the traders make some take profit first. Right? That doesn't happen, right? You never hear that, right? It doesn't make any sense. So it's very different from the stock market. You need to understand that logic. Without understanding the market you're trading, you cannot build a career in that market because the basic elements of why it moves the way it does is missing. How many of you guys are hearing all of this for the first time and you're like, you know what? I never thought of it that way. First time? Yeah? Okay, so a few of you guys, right? All right. So is it starting to make sense? Is it starting to make sense that I can't believe I've been missing out on this type of information? So now when the markets are moving and it starts to go up, and then you get a movement down and then you buy it, can I expect 400 pips movement in one direction? Not in Forex. Not in Forex. That's highly, highly, highly unlikely. It happens once in a blue moon, but it's not the norm. As a trader, what do you need? The norm or the unlikely events? Are you a trader or are you a lottery trader? Because the lottery trader looks for once in a blue moon. For a trader, your job is, I need to live off of this, right? If I need to live off of this, means what is the norm? And how do I trade the norm? Okay, when I say norm, it means normal. What is normal in the market and how do I trade from it? Okay, so when you see markets that go like this and you see someone saying, you know, today I made 400 pips, and everyone's like, oh my goodness, you made 400 pips? Teach me. Teach me, oh wise one. If that's what you're requiring from the market on a daily basis, I can tell you that person is not making any money guaranteed. Not making any money guaranteed. Right? But if you see a person saying, I can do 20 pips, I can do 30 pips, I can do 25 pips here, 30 pips there, I can do 15 pips there, 25 pips there, and I can do it consistently. Few losses here and there, but consistently. You are actually now talking to a trader when you hear that. A real trader. Not a guy making 100 pips in one direction and then saying, look at my Instagram, look at all those 100 pips I made. Come on. Give me a break. Right? Okay, so far so good? Let's dive deeper. Let's go in deeper. So the ATR tells you movement is there. You need that movement to make money. As a trader, we live for movement. No movement, no trade. We live for movement. Okay, so far so good? Okay, so ATR is a very useful indicator. Okay, I'll show you guys on my chart in a little bit and how that looks. The other indicator, moving averages. Okay, so moving averages are you know, when you see the market going in a certain direction, a moving average are basically these squiggly lines that follow the markets, right? They follow the market in a nice, beautiful way. Okay, now it may look like, oh wow, they can predict the direction. No. All it's doing is a moving average. A moving average is taking the average of the movement. Just like the ATR, you have to put in the period for this also. If your period is also 14, it will take the average of the last 14 and give you a direction based on that. Can I do a moving average of 13? I can. Can I do one of 11? I can. Can I do one of 40? I can. So can I ask you guys one question? 20 is the golden moving average. True or false? 50 is the golden moving average. True or false? 200 is the golden moving average. True or false? It's just a number. It's a number I'm pulling out of my butt. It's like it has zero value in itself. Does that make sense? In itself, it's useless. In itself is useless. However, why are moving averages important to traders? So let's say, have you guys heard of multiple time frames? You guys have heard of multiple time frames, right? Okay, let's say I'm looking at the 60-minute chart, but I also, before I get into my trade, I look at the 15-minute chart. Okay, I look at these two time frames, 60 minutes and 15 minutes, just as a rough example, right? 60 minutes and 15 minutes, right? So far, so good. Now, a 60-minute might be doing this. If I set a moving average on that, let's say a 20 moving average, what do you think the moving average is going to look like? It's going to look like this. It's going down, right? Now, during this pullback that happens, on my 15 minutes, when it's doing this, okay, sorry, I should draw it nicer. Okay, so that part is that part. What do you think my same 20 moving average is going to look like here? There you guys go. It's starting to look like that, like it's slowly churning, right? Where moving averages come in handy is I don't have 50 different screens to look at, right? I'm not a grasshopper where I'm just going to keep looking around everywhere and hope that I don't have neck pain, right? By surrounding myself in a movie theater style room where I'm just constantly bombarded with screens and information all over the place, because that's what a trader is supposed to do. No. It's like you can't just set up 50 screens and be like, now I'm a trader. Yeah, look at my trading desk. More screens equals trader. Right? High-speed internet equals trader. Best broker equals trader. Oh, come on. Come on. You got to be a little bit more real. A little bit more real. So where this comes in handy is when you have a 20 moving average. Now, ready for this one thing? Between the 60 minutes to the 15 minutes, how many candles difference is that? 4. 4, right? 4 candles. So can you tell me what is 20 times 4? 80. If I put an 80 moving average on my 15 minutes, what will it look like? Exactly like that on my lower time frame. So if I use multiple moving averages on my screen, let's say the price is doing this and I see that moving average, I see that moving average, but I see a big slow one going like this. Do you think I'm in a downtrend or uptrend or in a pullback? What do you think I'm in? That means I'm in this situation. I can immediately understand what am I dealing with without having to go through the entire movie theater of selections. You know, let me go into theater number 1 and see the 60 minutes. Let me go into theater number 2 and see the 15 minutes. And then I'll get some popcorn before I go into theater number 5 to see the 5 minutes, right? It doesn't work like that. So you can precisely make use of your tools that are given to you. You can make use of your tools. But using those tools to enter and exit, that's not what I'm saying. You don't want to use your MAs to enter and exit. You want to use your MAs to give you a guidance of, and now it is pulling back. People are thinking it's a sell, but overall, it's a discounted price. to buy. Overall, it's a discounted price to buy. Does that make sense? All right. So you have a slight understanding of now moving averages. You have an understanding of ATR. What about all the other good stuff that we were, depending on how long you've been in the market, what about all the stuff we were raised doing? Like the MACD, the RSI, okay, the stochastic, okay? What about all those good stuff? Can we use that? That comes in handy for something called divergence. Okay, something called divergence. If you guys don't know what divergence is, you can go onto YouTube, type in divergence trading strategy, look for the video from Urban Forex. There's tons and tons and tons of examples and concepts and strategies around that I talk about it. It's not how do you trade this, it's how do you use it to understand price action. Because sometimes the market moves so fast, indicators can't keep up. And that is actually a sign. That's actually a sign. So can I ask you guys one question now? Ready? Let's go into, do you know your indicator? Let's start this question, this little quiz, this little trivia. Do you know your indicator? Ready? Let's do this. Okay, let's find out if you know your indicator. Okay, let's say this is all of you guys, this one dude. Okay, it's a male and a female. This one dude and dudess is all of you guys in a collection, right? Now, prices are moving sideways. You guys decide to get in on the buy as it's starting to break above. You're in the buy. Okay, the buy is starting to perform. How do you feel? Good, right? Any issues going on in your mind right now? It's moving slowly towards your direction that you wanted. I want all of you guys to tell me one thing. When you see this, how do you feel? Okay, what do you do now? A lot of you guys are saying get out, grab it, remove some money. Or are people thinking, oh, perfect, it went this far, it'll go 500 times more than this. We'll just hold on until it goes up so high that we can say hello to people in the International Space Station. No, right? We're not going to hold on like that. That's crazy. This is the same thing that causes a divergence. If I do a 14 moving average, where do you think my MA is, my moving average is? It's going to be here. That's it. It's going to be here. It can't keep up because this was too fast. This is what's called overextended. This is what's called overextended. Now, can every indicator give you a sign of overextendedness? Yes, they can. Can I ask all of you guys now, whenever you see a sign of overextendedness, I just asked you guys, what would you do if that situation happened? And what did you guys all say? I would remove some money. I would remove all of it. I would remove something. Everyone is saying do something. That do something process makes the price come back. So anytime price is overextended from any nonsense indicator, it makes price come back. It makes price come back. Does that make sense? So that's how you know your indicator. That's how you know your indicator. When you get that overextendedness, expect a deep enough pullback coming back. Okay, that's how you generally get some ideas of, that's how we're getting a divergence. The whole concept of divergence is an overextended situation from whatever indicator you're using to understand divergence. Okay, in a nutshell, I just gave you divergence in a whole, and I'm saying use any indicator you want. You can do divergence just like that, just like that. So now you understand divergence without saying, no, the guy said I need to use this indicator with this period on this time frame exactly that way. No, don't do that. You need to understand what you're doing. Don't just follow orders. Right? Does that make sense? Be that kid that's super annoying to your parents who always says, why? When someone tells you, hey, take out the trash. Why? Like, because we need a clean house. Why? Because it's good to live in a clean house. Why? Like, be that irritating kid that always needs to know why. Don't just say yes to everything. Okay? Don't do that with your parents, please. But in the market, you must ask why. You must find out. Does that make sense? All right. So shall we move on to the charts a little bit so you guys can see this? See how it looks? Okay, let's move on to the charts. Let me open up an empty chart for you guys, and we can start plotting all of these things, and we'll discuss it a little bit so you guys can see it as well. Let me remove, there we go. Let me know when you guys see my screen. I have some charts there. Yeah, charts visible? Let me get my chat out. Yeah. Okay, looks like you guys can see the chart. All right. So now I'm going to make it even bigger so you guys can see it. Now, if I go into my 60 minutes, okay? If I go to a higher time frame and I say I want to put in a moving average, so I'm going to type in moving average. Okay, I'm going to use moving average exponential. Okay, you can use any of these. I'm going to use moving average exponential for this example. And in the settings of that, I'm going to choose for the length or period, depending on what you're using, I'm going to say 50. Okay, 50. Do you see how that moving average looks? The last 50 candles, that's what it is. That's what they've been doing. So far, so good. That makes sense. So now I know that on this time frame, we're now turning upwards. We're now turning upwards. Now, if I use the same 50 moving average and I'm on the 1 minute time frame, it looks like it's going down, doesn't it? So there's a difference between, wait, if I use the same thing on the 1 minute, it tells me a different story. If I use it on the 60 minute, it tells me a different story. Yeah. So where it comes in handy is if you want to trade in this direction and you're saying, okay, but give me a discount and I will buy it. You want to know which moving averages turn down in this direction. So people are selling that because they're following the indicator. Let them sell it. Let them sell it. As they're selling it and it's coming deeper and deeper, you're able to then catch buys at a discounted price and proceed further. So you've heard of the terminology of let it pull back into the MA and then we'll buy it. Right? So here's the complication with that. If I put in this, okay, I'm going to use a moving average again. And this time I'm going to put two more. 20. And the other one, I'll just do 5. If I can. Let me do it again. I'll just change one of these guys. Wow, it's getting buggy for me. Sorry. Oh, there we go. I'll do 2 moving average, for example. Okay, now look at that. The 2 moving average, I don't know if you guys can see it. It's right there touching my price. Right there touching my price. Now, here's a $1 million question. When people say let it pull back into the MAs, well, here, that one, or that one? Well, which one? Which one? Which one is the golden one? Where's the one where I can easily make money without thinking ever? What is the golden one? Here's the answer to that. There's no golden one. There is no golden one. You got to figure it out. You got to figure out what the market is trying to tell you based on that information. So instead of thinking, let it pull back to it, let me ask you guys one thing. Let's say on the 15 minutes, okay, really quickly, all of you guys, on the 15-minute, remember that character I drew for you guys? All right, dude and dudess, all in one, right? Now, you guys are in this cell. The cell is going down like this. Okay, cell is going down like that, and it starts to turn around. Would you guys start to exit? Right? The higher it goes, the sooner you'll exit, right? The higher it goes, the more you'll exit. So here's the thing. If I look at this back from the 1 hour perspective, you guys are not getting rid of your cells until up here. You're not getting rid of your cells until much higher. So then what's the answer? Oh, I should have used this yellow MA right here. That was perfect. You see, I knew it. Let me switch the situation around. You're on the 15 minutes. The price does this. And it goes very, very fast. What would you guys think is happening right now? Would you guys, dude and dudess, would you guys stay in or get out? Okay. It moves down very, very aggressively. It's never done that before. Your ATR says it moves 20 pips on average, but suddenly you got 50 pips of movement in one shot. That's going to make people panic and saying, okay, get out, remove some money, do something, move your stops to break even. Everyone's going to take action. Everyone's going to take action. If you look at that then on the 1 hour, people might say, it's the blue one. So is there a real answer to which MA is perfect? Or does it depend on how the market unfolds to it? There you go. There you go. Good. All of you guys are saying it depends on the situation. The context is very important. So let me ask you guys one thing. This indicator right here, the most popular one on the internet, Fibonacci retracement. I click here, I click there, and I say, guys, this 50% movement, watch. If it touches that, I'm telling you, sell the house, sell the grandma, sell the kids. Get ready to put all your money onto this buy because you're going to have to go buy a Ferrari after this. Can't do it. Can't do it. If I say, guys, I'm going to draw this ABCD Batman pattern, Catwoman pattern, Blue's Clues pattern, and I want you to buy it at 78% because trust me, it's going to go from there. On what basis? On what basis? On what basis? You see what I mean? It's like me telling you, all of you guys in here, because you're smart, I'm going to assume you didn't vote for Trump. Isn't that stupid to think like that? Like it sounds ridiculous, right? But why do that to the markets? Why just guess and saying, well, we won't watch and see how it unfolds. We won't treat this one trade as a unique individual trade. We'll just label it. We'll just label it. Stop labeling trades and saying, oh, I know what this trade is. This is going to be an A, B, C, D, X, Y, Z pattern. This is going to be 1, 2, 3, 4, 5, 6, 7, 8. Oh, this is this movement with the 40% pullback and a high up movement on top. Context. What if, okay, okay, so in terms of statistical analysis, let's say statistically when it goes up this much, it pulls back 50%. Okay? That means we want to buy. Let's say statistically, you've done all the mathematics. What if I do this? And I say, actually, according to this, it's pulled back 50%. You need to sell it. Well, who's right? You or me? Which statistical analysis are you going to trust? The one that says buy it or the one that says sell it? Because they're both saying the same thing. You see what I mean? You see what I mean? An indicator is just hope. It's just hope. You need to learn to read the markets and use the indicator as your tool. Okay? You don't say, because I have a screwdriver, therefore I build a house. You say, because I need to build a house, I need a screwdriver. There's a difference between that language. Okay? Just because you have money for gasoline doesn't mean you're going to buy a Ferrari. Okay? It's stuff like that. You got to be very, very careful with these things. You got to be very, very careful with these things. So let's put up let's put up some other indicators here. Right here, what you see on the bottom, this yellow line. I don't know if can you guys see the yellow line on the bottom? That's basically the ATR. That's the ATR, right? It's telling me, if I put my mouse right here, I want you guys to focus on this number here, okay? Where my mouse is. I'm going to put my mouse currently here. What number do you guys see? It says 163. It says 163. The setting for this ATR, oh, come on. Okay, setting for this ATR is 14. And it's saying 163. Now, does that mean in the last 14 hours, because it's the 1 hour chart, and I'm using the last 14 candles, does it mean it's moving 163 pips at a time? No. It's 16.3. It's 16.3 pips. So in case you use ATR, it's 16.3 pips. So compared to the past, would you say compared to this day, the ATR has increased a lot since then? Compared to this time right here? Yeah. Now, would you say it's easier to make money in this period versus this period? Which one is easier to make money? Yeah. So, and having an inflated ATR is not a bad thing. It means there's momentum, there's volume, there's transactions happening. There are people involved in buying and selling. It's a hot pair. It's a hot currency that people are looking to buy and sell. Now, your job is to correctly buy and sell in that activity. But trying to correctly do it in this type of market, it's death. It's death. That most likely, even if you're good at it, you're gonna end up losing because it's dead. Exactly. Right. Very good. Very good. Okay. I see a lot of you guys saying because it's dead, right? Does that make sense? Now, volume has its own sense of purposes also. Now, how many of you guys in this room actually use volume? We have a whole section on our website, a whole course on just volumes. And with volumes, we're very specific on how we do volume. Very, very specific. Okay. Now, volume is important. Volume is important. Okay, it's very, very important. Now, I'm going to ask you guys a simple series of questions. Ready? Simple series of questions. Here we go. Let me get onto the whiteboard. It's easier to draw there. When it comes to volume, oh, let me get your chat out here. Okay. Okay, so volume. When dealing with volume, I'm going to ask you a question here. Ready? So if the market is doing this, and then a high volume comes in, right? In there, what does that mean to you? What do you think it means to you? Let's just put it that way. Market makers keeping it in the range. Okay. Whoever's buying, somebody is selling. Whoever's selling, somebody is buying. It's a range. It hasn't done anything. It hasn't gone offset. Let's take it further. Let's take it further. In this process, volume increases. What do you think that means? Buyers are starting to kick in. They're interested. They're getting interested. Okay. What if there's a high volume there? Okay, let me change it up a little bit. What if there's a high volume there? Yeah, during the overextended situation. Does it mean buyers? Or does it mean sellers? This representation is the buyers are getting out. They're cashing out. They're removing money. Because remember, that's what you guys would do too. So you have to understand that where the volume is in context also makes a difference. It's not because the volume color is green that means buyers are there, and the volume color is red that means sellers are there. It has nothing to do with colors, nothing at all. Also context. So volume, very, very important, but by itself, useless. But you need to understand it in how you read the charts. That's when you can use volume for your advantage also. Cool, isn't it? So there's actually a lot of good tools that you can use. So take it from me when I say indicators are not necessarily bad. What's bad is the understanding around indicators. You need to have a better understanding of how can I use them to my advantage, not how can I use them to trade, to make money, not like that. Because, and if you do it that way, remember how we did the example in the beginning, why instead of you following it, the indicator's following the price. Well, what's the point? How many of you guys who were in here today felt like you had an aha moment today? There was things you picked up on that you didn't pick up on before. There were some basics that needed some little cleaning up in the basics of, oh yeah, I can't believe I didn't think that the Forex market is not the stock market. There's two companies. If the chart goes up, one company is in trouble. One company is in trouble. Okay, like you have to take this information in, which means any targets that you have for 400, 500 pips, chances are you need to do a huge fundamental analysis to do that, which means you need to know the US economy or certain economies are going to be hurt or rise dramatically in the period of the next 1 week to 3 weeks to 4 weeks. You can't do that with technical analysis. You need to know fundamentally if you want to get it right. But if you want to do smaller movements, that 30 pip grab, 40 pip grab, you can get away with that on technical analysis without having to step into the direction of, I hope this is right with the fundamentals. Pop quiz. When you see a person saying, I made 200 pips today, do you hit follow or unsubscribe? Run. Like run. Practice your jogging the other way. Like run away. Okay. If you see someone saying, hey, I turned $500 into $50,000. You can invest with me. Here's my WhatsApp telephone number. What do? No, don't shoot them. I see people saying shoot them. No, don't shoot them. Just walk away. Just walk away. Just walk away. Okay? All right. So at the end of the day, can I ask you one thing then finally? If you want to make a lot of money in Forex, is it actually hard to do? No, it's not. It requires focused attention though. It requires you to step out of that mindset of it's easy. Okay, and I'm going to figure it out in one day. That mentality needs to be put aside. You need to understand that, all right, I can do this. I need the right guidance. Once I have the appropriate guidance, I need to think for myself with that guidance of, all right, I'm going to try that. I'm going to see how that works based on that guidance, which makes sense to me, and I'm going to build upon that. This is a journey I'm going towards, instead of saying, I'm going to do this. The guy said in 2 weeks, I'm going to become a successful trader. I'm going to throw some money towards his course, and I'm going to say, all right, come on, it's been 2 weeks. Look, I was busy for 2 weeks. I was at Thanksgiving dinner, but come on, why am I not rich yet? No, you got to do something. You can't just take it easy. You got to do something. You got to practice. You got to practice. There's a lot of good information out there. There's a lot of good guidance out there, but you got to put in at least a little bit of work, a very little bit of work. Okay. So all of you guys in here, you guys saw 70-something% of you guys already have the Urban Forex Mastering Price Action 2.0 course. It's a course that we provide at urbanforex.com to help traders look at the market in a particular way. Not only that, you need to find a guidance that you can understand from. Something that not only gives you ambition that, yeah, I can do this, but at the same time gives you that logical click in your brain that says, it makes sense why I'm doing this, instead of he said buy, so I just have to buy. I guess that's okay. No, never listen to anybody who's telling you to do that. You need to learn to think. Okay? So the entire Mastering Price Action 2.0 that we have on our site gets you to start focusing in a particular manner. Okay? That's where your journey begins, to get you to focus in that manner. So if you are interested in that, an email will be sent out to all of you guys who do not have the Mastering Price Action course, those of you guys who are here live. So look out for your email immediately after this webinar. And we'd love to have you inside the MPA 2.0, and we'll get cracking onto that and teach you some really cool stuff that you've never seen anywhere before, and basically get into the bare bones of why something needs to be done. Okay. All right, guys, that's all the time we have for today. Thank you all for coming. I know you guys are taking your special times off from your day and work to be here. Really appreciate it. Always good to see all of you guys. Until next time, guys, cheers.